I am Daniela Cambone coming to you live today for a very special edition of StansberryInvestor.com. We are talking all things Bitcoin today as the crypto's value continues to soar. The government keeps printing dollars and a slew of new opportunities emerge. Stansberry's in-house cryptocurrency expert Eric Wade is stepping forward this upcoming Wednesday, March 31st, with what could be our biggest money-making prediction this year. He joins me live today to talk about his upcoming webinar and give us a sneak peek. It's called Beyond Bitcoin. And Eric, welcome to the show. We're live. How exciting.
Thank you. This is fantastic.
Absolutely. Well, we're going to tell people how they could sign up for the upcoming webinar. But first, look, we're talking today, Bitcoin's making higher highs, cryptos across the board are making higher highs. So the $1 million question for you, Eric, right now is, is it too late to get skin in the game? Is there still room here?
There's a lot of room. Just how you define that, though, is when it starts getting to be a little bit more interesting and a little bit more fun legwork that you can do. We tend to think that Bitcoin and then the technology and the cryptos that are built on top of that follow it tend to have longer cycles. It's, to me, fascinating because sometimes we get really into the short-term moves, a few months that it takes to move from 10,000 to 50,000 or something like that. And it feels like it moves really quickly. But in reality, Bitcoin and cryptocurrency cycles tend to play out over the course of years. And I like to think just round numbers, easy thing for you to digest is, I think we're about a year into a 2-year cycle.
Wow. Okay, so if I'm interpreting that correctly, a lot of room to grow here.
A lot of room to grow. Now, obviously, with Bitcoin's legendary volatility,
right?
And we've got other, and we'll talk about this a little bit more in depth in the webinar, that we can really dig into it. But we've got other factors that we have to pay attention to, and what's on everyone's mind is dollars being printed and money sloshing around the world and stocks at these outrageous valuations. And what are these other factors? How are they going to affect cryptocurrencies? And will cryptocurrencies de-link from them? And yeah, definitely we'll spend more time on that on Wednesday.
Well, let me ask you this, and I'm sure you've heard this ad nauseum, how people have compared the Bitcoin rise to a bubble and likened it to the dot-com bubble of 20 years back. And of course, what we saw in Amazon and Apple, they survived, but their stocks dropped dramatically over the course of that time. So when people say that the cryptos are a bubble, what's your response?
Well, this sure looks like a bubble if you look at it from one direction of cryptocurrencies. But at the same time, I think that the comparison to NASDAQ or dot-com bubble back then leaves out the inarguable tenet that this is a different monetized asset than dot-coms were. And I think if you look back at the dot-com bubble, it was back in a time when the word of the day was eyeballs and clicks and stuff like that, right? That all anybody could think about was, let's get some traffic. And those were the holy grail. Let's get millions of users. Let's get tons of traffic to our site. And certainly Amazon and Apple survived that. Now their stock prices dropped, and there's no real pure comparison between cryptocurrencies and equities. But then you have to factor in, like I just said, that cryptocurrencies are monetized differently from the beginning, that you can't touch Bitcoin, you can't interact with Bitcoin, you really can't do anything with Bitcoin itself without some Bitcoin being involved. Now, maybe it's just a fee that is $2 or $5 or something to move money around the world. But that's the major difference, that dot-coms, a lot of them were built overnight with no thought to And every time someone clicks on something, some money changes hands. And that took a decade to build into it. So I think that cryptocurrencies, because they were launched with proper monetization from the get-go, they're decades ahead of where .coms were at this point, or at that point.
Let me ask you this. Let me ask you this then, Eric. Fed Chair Jerome Powell over a week ago came out saying that Bitcoin, if you want to compare it to anything, it could be compared or be a substitute for gold, but it cannot be a substitute for the US dollar. Now, yes, of course, he has a certain agenda to push, but what did you make of these comments?
I'm glad to see him, at least in the context of that, admitting that gold and Bitcoin are more sound currencies than the US dollar. Now, obviously, that's not the wording he used.
I don't think so, yeah.
Jerome can't print gold. Jerome can't print Bitcoin. Jerome can print dollars. So he's right. There's less of a similarity. And the fact that there's $19 trillion worth of dollars sloshing around out there, and people should think to themselves of, if I wanted to trace back, if I own dollars, if I was a shareholder in dollars or in the United States currency system, if I had a lot of my wealth in dollars, could I look back and say, where did these dollars, what's the purpose of them? Who's creating these dollars? And we talk about it a lot with just terrible stories about, oh, they're printing dollars. But the idea is, if you wanted to chase them down, you can't. And with Bitcoin, you can. And gold, 10,000 year store of value. It's I'd rather be likened to that than to a currency that is perpetually losing purchasing power. So thank you, Jerome. I'm glad to see you coming on board.
Yeah, and you're one of the few Bitcoin proponents out there, Eric, that also values gold and sees a place for gold.
Yeah, I absolutely do. And I don't know if there's a better way to describe it than just gold has a millennia long store of value, and it doesn't have the same technologies as Bitcoin, and they're different, but I think they have more similarities, more overlaps. And I also think that Bitcoin's famous volatility is different than gold, much different than gold. So I like them both. I think to say that gold has no place would be like saying that real estate or fine art or in a good investment in a nice bottle of wine or something, or a good classic car. They're all different. They all have a place in a reasonable portfolio.
No, well said, Eric. And just getting back to Bitcoin's price action here, I've heard you say in past interviews and to me as well that for you, blockchain is an unstoppable force and technology. But whether this rally is sustainable or not seems to be the only thing on most investors' minds.
Yeah, I think that the big issue that a lot of people think about is the exchange rate between dollars and Bitcoin. And I think that's probably why Bitcoin's performance surprises a lot of people, even as mature as it's getting, that it's well over $1 trillion market cap, and yet it still runs around like a teenager startup. That because people focus on the dollar value of it, and because there's only 900 Bitcoin a day being mined on average. I know some days it's a little less, some days it's a little more based on the speed of the miners. But in general, only 900 new Bitcoin a day, and therefore the dollars chasing it, it becomes a bit of a self-fulfilling prophecy that if you're concerned about the price going up, you buy some and the price goes up.
Eric, I don't want to be giving away any spoilers from your upcoming webinar this Wednesday, Beyond Bitcoin. But typically when a disruptive technology hits a 10% adoption, we usually see a rapid adoption, more so over the course of the next few years. So what do you tell a new investor entering this space who might have trouble handling the volatility here?
You need to make sure that you invest speculative money at first while you're getting to know it. And I know there's a full spectrum of Bitcoin believers. There's um, just as many people who think they'd rather have more Bitcoin than dollars, as there are people who think 1% is the right number to start with cryptocurrencies. But if you look beyond Bitcoin, kind of our catchphrase for the webinar, and you look at the technology, because Bitcoin is it's Bitcoin, it's unique, it's got all kinds of wonderful facets to it. But the technology that was spawned as a result of that, I think that's where people should start thinking of it as, where can I place this in my portfolio with a disruptive technology? And to do that, you have to start with investing in Bitcoin or some of the other major cryptocurrencies. So you start off with a small position, even if it's $100, and you get to know it. And then maybe 500 or maybe 1% of your portfolio. And sometimes we even tell people, if you just really can't fathom, where do I start with this? Then think of, if you heard the greatest pitch for the greatest small cap startup, speculative, I'm willing to risk losing this money because it's going to go 500% kind of money. How much would you put into that kind of a position? What would you put into one tiny speculative position? And for some people it's $1,000, for some people it's $5,000, but maybe start with that so that it looks like another high-tech speculative position in your portfolio, and grow from there.
Absolutely, that's a good way to look at it. But Eric, you also have a rule of thumb for when you triple.
I do, and we actually have a lot of debates when I'm talking to people about this, whether it's a great rule, whether it's opens us up to other other interpretations. And in a nutshell, the rule is, when your cryptocurrency triples, you sell a third. And here's where the debate starts, because the idea being, if you put, let's say, $10,000 in something, and that's the right position size for you. And the idea, we're buying these because we expect to make gains. So if it triples, then your 10,000 is turned into 30,000. And we say, okay, so sell a third of it and get your 10,000 back out. And you can imagine all of the possible conversations people might want to have with this is, does this mean you're selling your winners? Because we all know you're not supposed to sell your winners. You let your winners run. Yeah. And another one is, well, it's all my money, right? Like you don't tell me that taking 1/3 out is me getting my money back out, because if I have $30,000 in something, it's all my money. But if we stick to our guns on that, one of our other rules of thumb is, I want you to be in a position where the position size matches your risk tolerance. And that's hard to do with something that if 10,000 is the right amount, and now you're sitting on 30, what do you do? And I also want people to be able to remain unemotional, because maybe the two outliers that come up on this is despair on the one end, if you're dead wrong and your position really, really goes against you, or elation or euphoria. You see a lot of people that make decisions at the euphoric periods of the market, when everything looks like it can't do anything but go up. Don't make a decision based on that. You can make a decision at that time, but not based on that. So how do we keep ourselves from being yanked around back and forth by the volatility, as well as stay unemotional, as well as try to match our position size with our risk tolerance? Yeah, when something triples, we sell a third of it, and we move that money either back into your principal, or a store of value to be redeployed later, like gold or something like that, or if need be, then into a stable coin or something. Most of the time it goes back into Bitcoin, though. If we buy a tiny crypto and it rockets up, then we'll sell a third back into Bitcoin.
Well, I think it says a lot that you have a rule of thumb in place for when your position triples, Eric.
It happens a lot in cryptocurrencies. It happens a lot. We try to find the best of the best, and it happens more than you'd think.
All right. Well, Eric, thank you so much for joining me live today. I know I will be watching your. It was fun for me too. I love it. It's our first time going live here on StansberryInvestor.com. So I'm happy you were my co-host today and giving us a sneak peek of what we can expect this upcoming Wednesday for Beyond Bitcoin. It is airing Wednesday, March 31st at 9:30 a.m. That's Eastern Standard Time. But in order to view it, you need to sign up at messagefromeric.com. Again, that's messagefromeric.com. And Eric, you're not going to say this, so I'm going to say it for you because you're a humble guy. But the last time Eric had an event like this, he urged his viewers to buy Bitcoin just before it soared over 400% in only 7 months.
Wow.
Crazy.
Yeah.
Now you're revealing what's next.
Yeah.
Plus, you're giving away 6 tiny cryptos floating under the radar that could basically 10x your money in 2021. That's why I say I'm not going to miss this episode.
Thank you.
I wish you could tell us now. I know you won't. So sign up, message from Eric.com. Thank you so much, Eric Wade. I'll see you Wednesday.
All right. Thanks. Talk to you then.
And thanks for joining us, folks. Our first ever live here at StansberryInvestor.com. Share us where you watch us. Keep tuning in. That's it for me. I'm Daniela Cambone.